Boom. All right. Boom, boom, boom. Here we go. All right. So first thing first, thank y'all for the opportunity. I can't say that enough because I am so busy right now. When I say I'm gonna need y'all, I am going to need you. I promise. All right. So before we start, they got 2 minutes. 2 minutes. And I'm gonna give everybody like an opportunity to just ask me any questions because I know everybody wasn't here for the first one. So before we start, if you got any questions, anything that's just on your mind and just burning you just to get an answer to, you got like 2 minutes. What's happening? Anybody got any questions for me? No, I'm so sorry you can't see me. It's the camera and ain't me. Nobody? Nobody got questions? All right, that's cool with me. And let me see if I got anybody else waiting in the waiting room. All right, nobody else waiting. So, hello everyone. I am Terrell. I am the owner of PRXNCE.TAX. I've been in business for 10 years. Next year will be my 11th year with my own tax firm. I've had my own tax firm for 5 years, actually, and I've been in the tax industry for 11 years altogether. And next year will be my 6th year with my own tax firm, an accounting firm. So, with that being stated, I started with nothing. I had 1 to 2, maybe 3 people when I first started, and I've now grown to about 300 people. With that also being stated, the tax industry is very different than it was when I first started. It was really like you had to go into the office, sit down with your tax professional, give them your tax forms. They started. It might take about 2 hours, maybe 3 hours, because you got people in front of you. And then they get their money 7 to 21 business days later. They can use a direct deposit. A lot of people was using that back then, so a lot of people was getting checks because they're at that time the cash refund advance. It was only check could get it. Okay. Boom. All right, we got 6 people. Thank y'all. God is so real. Let me first say that too. God is very real. All right. So it was only about 6 people. It was at the very beginning when I first started taxes about 10 years ago, the cash refund advance, it was only like $6,000 that people was getting then. And it was a cash. They had to get a check because they was getting it before they was getting the actual refund. But now everything is all direct deposit, ACH. You can get the cash refund advance. You can also get your and it's up to 9,500 now. It used to be 6,000. So it's up to $9,500 that you can get when you file. We start filing as early as January 2nd, 2026. With that being stated, you all receive 80% of your own returns. I normally used to do 70%. Now I do 80%. So you get 80% of your own personal people. And on my people, you get 8%. So any of my returning clients, you get 8% of that return. A good way to picture that would be like, so I have clients that range from people that pay $50 to people that pay almost $1,000 for tax prep. Tax prep is not the same for each person because everybody taxes is not the same. You all will learn that throughout this class, and that's what this is all about. You're also gonna learn why I price the way I price, and you're gonna see why it works and everything. So cool. Thank y'all for the opportunity. But what I was saying was about the fact of the matter is how you all get paid, because I know that's very important. So you all receive 8% of my people. So if I get $1,000 client, y'all just made $80 from that person. But if I get a $300 client, you just made, I believe it's like 75. No, it's like $54 you just made from that person, and so on and so on. But when you bring in your own clients, which I do hope that you do, because one, the incentive is with every 10 customers that you bring in within that first month. So from January 2nd to February 2nd, if you bring in 10 paying customers, you're gonna get an additional 1,500 on top of your commissions that you receive in February. All right. Then in February, so February 2nd through March the 2nd, if you bring in 10 people, you get another 1,500. And then March 2nd through April 2nd, you get another 1,500. So it's like 3 months of the opportunity to make like another seven. It's another 6,000, $5,000 to $6,000 just from just bringing in your own people. All right. So with that being stated, how Terrell are we gonna bring in our own people? One, I will provide you with a script. Two, I will also provide you with your marketing. So that's social media, that's advertisement. I'm gonna give you the whole caption and everything. Only thing you got to do is copy and paste. And if you copy and paste, people will call. Trust me, I'm really good at what I do. All right. And then the next thing is I'm also going to give you a list of people to call. Like, and so if you pull from my list of people who haven't filed with me, but maybe started tax prep, then that's your client. And then you get 80% of that person, and that's your incentive. So I'm going to give you that. I'm going to provide you with not only, so that way you could grow your business. Because if they ain't filed with me, that means they might could file with you. And the cool part about taxes is the reason why so many offices and everybody got their own little different shake and way of doing it is because that's called entrepreneurship. So if you don't like something down up the street, you just go up the street and make your own thing. And that's pretty much what will be going on. So that's why if they don't, I probably missed them. I probably didn't get to connect with them that first time. So that's the reason why you have the opportunity to follow up, connect, and they already know it's about taxes because I already started that relationship. All right. So as you could tell, I have been doing this for quite a while. I got a lot of different tax professionals from everywhere from that I work with from California, South Carolina, New York, Miami, pretty much the whole nation. It didn't matter where you was at, I could help you and I could get you right and teach you how to get to it and how to get to this money that we be talking about. So I do thank y'all once again. And Crosslink is the software I use. And so the way you would get to Crosslink is you would go to crosslinkonline.com and you would log in. And when you log in, I'm gonna just show y'all. Show y'all how this go. I gotta move my people down here. All right. So when you log in, you're gonna see that Crosslink allows you to see tax returns. It's gonna have access to the calendar. And I love Crosslink. Crosslink is my favorite. A lot of people use other tax software such as TaxSlayer. It's like 5 or 6 of them, but Crosslink is the most prominent one. They've been around the longest. And in there, a customer can set up an appointment. You also get the access to set up an appointment in Crosslink. So say you got a client and they like, hey, Terrell, they like, Miss Ruff gets a client and she like, this client wants to book sometime in January. She would go to create new appointment. She would type in Ruff client. And I do hope everybody can see this. And all this is being recorded. So you do get to watch the playback on YouTube. Just want to let y'all know that too. And I ain't spelled client right. Let me fix that. So client, I think I spelled client. L-S-E-L-I-E-T. Perfect. All right, but I had to make sure. And then you can set the time, the date, and everything. And you can even go forward. And we'll be in 2026. I say Miss Ruff client, and she can set a subject, also get the customer phone number, and leave notes. That's another reason why I like it. So anytime you all got a personal client or y'all got questions, y'all can leave it in the software and I can see it even though I'm not around you. Just wanted you all to know that. It also, when you do get clients and their refunds come in, you'll be able to print their checks from the Crosslink software. Well, that'll be really what I will be doing until you all get like your own software. But that's the power of the software. So no matter where I'm at, and as you could tell, I work with Republic and Santa Barbara Taxpayer Group. That's my main 2 banks that I use. You'll learn about the banks as we continue in the class. Today, you kind of just getting an overview of like, what to kind of expect. All right. And so you got prepares, then you got the dashboard. And of course, my dashboard is going to show everybody. So this is everybody. And these are all my clients. So last year I did 35, 37, 31, 3, and 46. And then my numbers are down there too. I think I did like another 50. So that's like, I think, so that's 50 plus 35, that's 85. 85 plus 3, I'm going to call that 88. And then 88 plus 46 people, 46 plus 88, what's 8 plus 6? That's what? 8 plus 6, that's 14. And then 8 plus 4, that's 12. That's 146 right there. Then you got the 31. So 31 plus 146. 31 plus 146. 31 plus 146. That's 7. That's 178. And then 178 plus 37. Let's see, 37 plus 178. That's 200. I mean, we just hit 200. 8 plus 7. That's going to be 3. That's 15. So 215. 215 people came through the software last year. And then what you see right here is called rejects. So a reject, you're going to learn about that. It's when a customer say they need an identity pin. It's different reasons on why a return can reject, but you see that. Then you also see I got business returns that I could do. And the 1040 is normally like a personal return. And you all will be able to differentiate and speak this language that I'm speaking roughly in about 2 months. In 2 months, everything I'm saying, it might sound like gibberish right now. It might sound like doctor language, but in 2 months, it's all going to make sense. Trust me. And the way that all makes sense is right here in this classwork. So one thing I really want everybody to do, if you have not, is please send me your email so I can invite you to the class. It's a Google Classroom. And in the classroom, you're going to get your chapters, you get your study questions, your learning activity, and then you get your chapter. And today we're going to be doing a general overview. And when you click it, look at it. It's so cool. Look, it's like a regular class. Just like if you was going to UAB or wherever you decide to go, whatever college, it's just like that. And it's self-study. So there are times when I will set assignments for you all. I'll be like, hey, try to get this in by this due date. So that way you can all stay on track. But it has PowerPoint presentations, and then it also has the actual chapter. Now, the PowerPoint is just like a synopsis of what the world is going on. The actual chapter is what I really recommend you read. I know we all are busy, but understand the reason why people pay me $1,000 is not because I'm cool and fly. It's really just because I have knowledge. And they don't have that same knowledge, so they pay me to get someone who not only is comfortable to speak with, they pay me to understand it, and then they also pay me to decipher it back to them so that way they can grasp it. And that's really all tax really is. Like, it's really just helping somebody understand what's going on. Like, that's all it is. So if you good with customer service and you good with just kind of just chatting it up with somebody for like maybe 45 minutes, then you're going to love taxes, just to let you know. All right. So today we're doing the PowerPoint because I don't really want to read all that much. But y'all do read, okay? Go check it out. I've been doing this course for 10 years. And it's always something new in this information. So if you think that you know everything, please do check it out and then make sure I got no more people waiting in my lobby. All right, so yeah, everybody here. All right, so before I continue, anybody got any questions for me? Anybody? Just want to make sure. I'm doing good on timing too. I wish y'all could see me. All right, and everybody can see my screen. Just want to make sure. Big. All right, so comprehensive tax course, module 1, chapter 1, general overview. Learning objectives. Today we're going to determine who should file, identify filing requirements for most taxpayers. We're also going to identify filing requirements for dependents, determine which IRS forms to use, determine when, where, and how to file. We also going to differentiate between the various accounting periods and methods, discuss the requirements for a correct Social Security number or taxpayer ID, identify filing statuses. We also going to determine if the taxpayer is a resident or non-resident alien, and we also going to describe the information presented on the W-2 form. W-2 is what you get at the end of the year, whereas in the beginning of the year, but you work all year, you get this form at the end of the year, and it just states your income. It tells how much FICA was taken out, which is taxes. It also says how much Medicare. It also breaks down how much you paid in healthcare and things like that. And then we're going to describe the paid preparer signature and identification number. That is the thing that allows me to be a paid preparer. It costs $19.95. It used to be free when I first started. That was about 10 years ago. But now it's $19. When you do register, if you have any trouble registering for your PTIN, just give me a ring because I'm pretty sure there's some information I need to give to you so that you can register your PTIN, especially what you're going to be working under me in the next year. All right, so key terms: adjustments to income, adjusted gross income, dependent gross income, non-resident alien, resident alien, personal exemptions, and taxable income. And one more thing before I really continue, I just want you all to know it's just a class, okay? So like I know it's gonna be new information, but a lot of this you already really know because you all go to work. You know what I'm saying? And just to kind of break that down, some way, form, or fashion, we all understand that a dependent is somebody that's being taken care of. So whether you new to taxes or you've been in the tax game for a minute, we all know a dependent can be it could be your parent that live in your home. It can be you living in your parent home. It can, it's just different situations, and that's the class gonna break down. And then adjusted gross income. I'm pretty sure a lot of y'all heard this in some way, form, or fashion. When you was applying for a job, applying for a different loan, or any type of application, and then non-resident alien versus resident alien. Alien is not the one that's out in space. That's not what they're talking about right now. And just want to put that out there. And I just don't want the words to kind of throw people off because it do get very wordy when it's in the tax world. But don't let that get to y'all, okay? Just understand that the real thing that we're really gonna be doing is one, greeting customers, two, taking their tax forms, and we take it through the internet now or through text message, so they upload it. You then gonna take that and put that data entry into the Crosslink software. And I'm gonna show y'all how to do that when we get to that point. But you'll hit tax return and you'll start a new tax return. And then you type in the customer social security number, you put in their information, and then most of it will come from the software. But then the part that really makes you the tax professional you're learning right now. So the role of a tax pro. Here we go. Attains the least legitimate tax. Okay. So what that means is our goal for our clients is to make sure that they pay the least amount of money in taxes. Taxes is most people's biggest expense in their life. It's really one of the biggest checks that most people pay, next to like their mortgage or like a car note throughout the year. All right. The next thing, we don't work for the IRS. We actually work for the taxpayer. It's just that we are able to interpret the gray areas to where we can advantage it in the taxpayer versus the IRS. So, you know how like people be like, oh, well, I don't really know because I do it professionally, but sometimes I get clients that come in and they just really don't be knowing what their tax professional be doing for them or what actually occur with their taxes. And that's one thing about my experience versus everybody else is I make sure people know what's going on a return, because even though we are the person that's preparing it, the client is the one that's responsible for that information we putting down. So is assertive asking questions to avoid missing income or deductions. That's really just that interview process that I was speaking about, where you ask the client, hey, do you have any children? Who all lives in the household? Are you the main provider of the household? Like, do you pay for the bills? Do you pay the note or mortgage? You know, that type of thing. Do you pay the rent? And if so, how much do you pay? All right. And is competent and professional. So throughout this whole process, you're going to hear that. And the professional part is the thing that separates us from other individuals who say they just file taxes. All right. So we follow all IRS regulations when preparing returns. And that's the reason why we're paid preparers, because there is a test that you're going to take after like chapter 6, after 6 or 7. You're going to take this test and it's going to certify you to be a paid preparer. So in about 5 or 6 chapters, you're going to take a test and it's going to all work out. But don't stress it, though. It's going to work out. Trust me. You're going to be so confident, you're going to kill it. All right. Then the next thing, refuses taxpayers' request to file inaccurate returns. So because we get paid and we receive money for this, the IRS holds us at a higher standard than just somebody that just uses TurboTax to file somebody tax return, and they just using, because TurboTax is a self-prepared return versus what CrossLink is. CrossLink, you're preparing a return for a client. When you're on TurboTax, you're filing your own return, and some people use TurboTax to file other people's taxes, and it's just so many ways that people just be getting people, but you finna learn the real way and how this is a business to this aspect. It's always alert to fraud. So fraud, inaccurate returns, and fraud is when people be like, "Hey, I want to claim my little niece, but she ain't really my niece. And they ain't got no birth certificate to prove they're related and things like that, but they just trying to get a bigger refund. That's fraud. So you definitely want to avoid them type of people. And when you hit them red flags, just leave them alone. Don't even try to convince them to do right. Just let them be. You did. Just let them be. All right. Then who should file a return? Okay. As you all can tell, who should file a return is anyone who meets the following requirements: someone whose refund of taxes was withheld, anyone with refundable credits. Refundable credits is someone with a dependent. That'll be the earned EITC credit. Refundable credit is the American Opportunity Tax Credit, which is someone who went to college and they in college their first 4 years and they receive a Pell Grant, so that allows them to get that money back. Now, if they just paying for college, they might not receive the American Opportunity Tax Credit. It's not the same. It's mostly for individuals who are in college and they're in their first 4 or their undergrad or their 5th year, and they kind of receiving government payment, and that's the reason why they receive that refundable credit. Another refundable credit is mortgage interest. So anybody who owns a home and has a mortgage on it and they're paying throughout the year, that's a refundable credit. Another big one is it used to be a big one was renewable energy. Someone who would put like solar panels on top of their home or buy a Tesla or like an electric vehicle or AMG. What's the name of that big one? It's the big boy Benz. It's like the big boy Benz. And they would get like a deduction because they get to recapture that. All right. Someone who owes special taxes, Medicare Advantage, MSA, health savings accounts, someone who had a net earnings from self-employment of $400 or more. And this just breaks it down. Someone who works at a church organization. All right. And I'm going to ask this question. I'm going to see if y'all paying attention. All right. So first question. And anybody could jump in and answer. Janice is a first-year tax preparer. Some of her clients who would benefit from doing so. Which of the following clients do not have a reason to file a federal income tax return? And who all I got in here? Let me see. I don't want it to go big, big. Oh, it went big. All right. Anybody want to answer? Janice is a first-year tax preparer. Some of her clients are not required to file, but will benefit from doing so. Which of the following clients do not have a reason to file a federal income tax return? Anybody want to give it a shot? Don't be scared, y'all. I'm gonna be busy. So the answer is going to be Jay and Eleanor. Oh, man, had 2 children, income for the year. They would definitely file a return. Jay and Eleanor, who are married and have 2 children, they're gonna get a nice little refund with their 2 children, because each child is like about $4,000, and then you get the additional child tax credit depending on how old they is, and that could be like an additional $1,500 per child. So it comes to about $5,000. That's like a $10,000 refund for them. And Lisa is single, has 1 dependent, and they will only be like a $300 client, just to kind of break it down. They would be like $300, so you'll make like $50 off of them. Lisa is single, has 1 dependent, and made $9,500 for the tax year. Oh yeah, we could definitely help her. Lisa put in her own information. She ain't gonna get the max refund, but then she come see me. I max her out, and she $1,000 client, just to break that down. So that could be $80 in y'all pocket. It could be y'all own $800. That's how fast it is. All right. James is 19, single, and a full-time student. He did not work during the tax year. So in the situation that James, it would seem like James would be the person that's not supposed to file. But at the same time, because he was a full-time student, if he was a college student, then he do qualify for that refundable credit. So he'll be like $100 to $200 tax person when it comes to the fee. And then you'll make like 8%, or you could make 80% of that $100 to $200. That's between 80 to, I guess, 160, something like that. So that's fly. And then you got Dorian, who is 60 years old, single, has no dependents, and she is self-employed with net earnings of $750 during the tax year. So I would pick C as James. And the reason why I would pick James is because James did not work during the year, and it doesn't state that he was a college student. It just states that he was a full-time student. So I'm pretty sure James getting filed by his parents. And you'll hear about that, and you want to know about that before you file a return, because if you send up James' return before his parents file, his parents won't be able to file an e-file return. They got to mail it in. Y'all gonna learn about that. But yeah, Miss Dorian, definitely, who is 60 years old and single, she should file. She made $750. So she, in some way, form, or fashion, do got to file a tax return. Lisa is single. She made $9,500 and she got a child, so she definitely need to file. Well, don't say that it's her child. It just said that she got a dependent. Now that could vary. Because again, a dependent could be just somebody that lives in Lisa's home, or it could actually be her child and someone that she take care of. And then Jay and Eleanor, they definitely need to file with us and get that money. You know what I'm saying? And they definitely need them individuals. You'll be like, you get that refund advance where you get up to 9,500 in an hour. And normally between January and February, that's like crunch time for a lot of people because they just got done with Christmas and they just got done with Thanksgiving. So when you speak about that refund advance and it hitting in an hour, that make them run to y'all, just to let you know. That's kind of why most people file with me too, by the way, because I'm that man. I get them that check and they'll be playing. All right, now the filing requirements for most taxpayers based on the filing status. And we're gonna speak about what filing status is at the age at the end of the tax year and their gross income or income received in the form of money, goods, property, services. All right. So that could mean that if they had real estate, if they were selling merchandise, form of money would be like their W-2s, and services would be like, say they had a cleaning business or something like that, and they was making money on the side. That would be all the income that we would gather from that individual. All right. Now, filing requirements for most people. Okay. Now, these numbers are no longer the accurate number. This is based off of 2017. We in the year 2025. Okay. So to get the most accurate number for the filing status for individuals, which is like their gross income, you will have to go to Google, and I'll send y'all a link. It's like an updated link. But everything that you really need to know about the IRS, in all truth, is at irs.gov. And you just go to irs.gov, because there's no secret now. All the tax laws, everything is all online, and everything can be pulled up. Not really a Form 911, and what I'm wrong, but just irs.gov. And remember, we don't work for the Internal Revenue, okay? We work for the tax profession, the tax client. And most tax clients, I highly recommend that if you ever are dealing with an individual and they don't know exactly where they are when it comes to their taxes, I would tell them to definitely go to their online account. And the way they would get to their online account is they would go to your account, just like right here. And a lot of it's simple and plain, but a lot of times that's the part of being in customer service, is when you remind people like, hey, what it is. It's just like when you go to the grocery store, even though they got a big old sign that say aisle 5, you still got to sometimes remind the customer, hey, aisle 5 got the salt and got the salt and all that other stuff, all the little seasonings on that aisle. You know, it's just customer service. And so you would take them to the site, or you would guide them to the site, or you would get on the internet with them, and that's how that works. But here are the filing stats, and they're important too. So single, that's what I am. I have no marriage or affiliation with anyone, so I am single. And it's not single in the fact that like single is like I ain't dating nobody, even though that is what single is. It's single in the fact of that I take care of myself for the year. All right. Then you got married filing jointly. This means that two people came together and they say that they put their two incomes together to handle their household needs. Married filing separately is someone that has recently been divorced, and what they doing is say they got an alimony, or they have a situation where they own property together and one has a high tax bill, the other one doesn't have a high tax bill. And I wouldn't even say divorce because this married filing separate. These people are still married, actually. It's just that their tax bills is different. So one might be like a landscaper or a contractor, and because they get all their money throughout the year, they have a huge tax bill where they owe like $3,000. And then the wife works a W-2 job. She's like a secretary. She does something in the office somewhere. So her taxes are paid from the company that she works for when she filed. So she doesn't owe any taxes. So what they would do is file married filing separately. Now, the only reason why we don't really recommend this one is because this filing status would disallow them certain credits, certain refundable credits that could actually get them a refund. So, but it's up to the client. Some people have to do it due to like court orders and stuff like that, and the way their properties and stuff. Then head of household. Head of household is the one that everybody hears about. Head of household just means that you are the person that take care of the home. You are the predominantly person that pay the rent, you pay the bills, you pay for the groceries and things like that, and you take care of everybody else that's in the home. And then qualifying widower with a dependent, that is someone who recently lost their spouse. It could be man or a woman, and when they lost their spouse, they haven't remarried in 3 years. All right. Now, after 3 years, they can't be a qualifying widower with dependent no more. It's only 3 years the statute. But after 3 years of no remarrying, they can continue to have the same filing status as head of household, or they get the same deduction as head of household. And you're going to see what that is next. All right. So deductions. Again, this is based off of 2017. If you want the updated standard deduction, you just type 2026 standard deduction amounts, and you will see that inflation is real, okay? Because this was in 2017, and this is $6,350 for a person that's single. That is now up to, I believe, $16,000 of a person's income that the person doesn't have to pay taxes on. And that just further explains on why milk costs more. That's why when you go get repairs done to your car costs more. And that's really just inflation. Inflation is the value of the dollar going down due to not technically interest rates, but due to the overproduction of money flow. And all this that I'm talking about, you will become an expert at it. Don't try to learn it all in one day. But as you continue to work with clients, you get in different situations, and then you'll be able to spit this information out just like I can. But don't try to learn it all in one day. Trust me, it will overwhelm you. All right. And then they got examples. Da-da-da. Oh, another review question. I'm gonna try to do like 2, 3 review questions with y'all. But do understand all this information is available for you all to review and play back. And it will be available on YouTube. And also, once I have everybody's email, you've all been invited to the Google Classroom. Again, I'm gonna resend out the invite, and then you all will have access to the Google Classroom. And you can just click on this and review it and check it out. But here we go. Review question number 2. Clarence, age 67, Jane, age 66, are married, filing jointly. They are not self-employed. Which of the following is their gross income requirement that they are required to file a tax return? So the way you will answer this question is you will scroll back up. Dun-dun-dun, dun-dun-dun, dun-dun-dun. And you would add them up. So married, filing jointly. Let me make sure I read the question correct. Clients age 67, they old too. 67 and 66, they is up there. Boy, they been living life. Are married, filing jointly. They are not self-employed. Which of the following is their gross income requirement that they are required to file a tax return? Okay, so the following requirement for a married filing joint tax preparer age 67 and spouse 64 is standard deduction, $12,700. Then they would get another standard deduction from them being over the age of 67. And then they get the personal exemptions for the taxpayer and his spouse, which puts you at $22,050. And that's pretty much the same way the class works. So boom, $22,050. Or the class work. So when you're in the actual chapter, use the chapter to help you answer the review questions. And you'll see what that is too in a few moments. All right, so this chart. The way the chart works is if a person says yes, then you continue this way. If a person says no, then this is the way it goes. All right, so this is how we go. Was the taxpayer either age 65 or older or blonde? So if they be like, no, was his earned income greater than 1,050? And if they say no, then you keep asking that question. Then if they say no, he does not require to file. But if at any point where he be like, was his earned income greater than 1,050, and he say yes, he must file a return. Just to kind of break down how this chart works. It is pretty simple, but you still like to discuss it. All right. We ain't gonna do that one. All right, so this is important. Most common tax returns forms. So form 1040 EZ. This used to be really popular back in the day, especially with somebody that comes up to the office and maybe is 66 or higher. They're gonna be like, they want to use the easy form or the short form. This is what they're speaking about. The 1040 EZ, it does not allow deductions. It's very short versus the original 1040, which is probably like 54 lines. All right, the 1040A. All right, the 1040A is for individuals that make less than $100,000 and they want to file and they want to file exemptions or itemized deductions. And then the 1040 is the most common return. That's the one that you already saw earlier when I was speaking about. Most individuals use the 1040 now because it covers everything from the 1040A and the 1040EZ. The 1040 is the most comprehensive and it is the longest. Because back in the day, people used to have to write this out. That's why they call it long. But now everything is electronic. You just literally type it in on the keyboard and it all pop up. But this breakdown what the 1040EZ is. This is what the 1040A is. And this is everybody who used the 1040. And all this, again, is in your notes and information. So you do get to review it. All right. Now, review question number 4. Mr. Dimitri was a tax preparer using the following situations to explain when a tax preparer was when a taxpayer will use form 1040 EZ. Which of the following use form 1040 EZ? Anybody want to try to answer it for me? I'm gonna answer it though. I'm gonna just let y'all just see. And we doing good on time. I hope everybody doing well, and I do appreciate y'all tuning in. Just want to say that too. All right. So let's break it down. Which of the following would use form 1040 EZ? So we got Jack, age 30, and Diana, age 28, are married, and they want to file a joint return. Their taxable income is $125,000. They would not be able to use 1040 EZ because their income is too high. All right. Dave, age 60, is single, has no dependents, and earned $55,000 for the year. It's sounding like Dave might be the one. All right. Maggie, age 30, is not married and has a 2-year-old daughter, and her earned income is $32,000. She wouldn't use the EZ form because it wouldn't allow her to get her refundable credits for her child who's 2 years old. Bob and Sarah are married. They have earned income of $58,000 and dividend income of $1,200. So because they're reporting a dividend income, that's what disallows them from using the EZ form. which is the easy form. So the answer would be B. Boom. Hey, I like how I broke that down. All right, bro. I ain't doing that one. We good on that one. Review question. All right. When taxes must be filed. This is important. All right. Due date for the calendar year, most taxpayers known as April 15th. Due dates falling on Saturday, Sunday, or a legal holiday are extended to the next regular business day. All right. This has always been the same. Due date for the fiscal year, taxpayers is 3.5 months after the end of the fiscal year. Due dates can be extended by filing Form 4868. That's really big and popular around April and around the end of March. There's going to be a lot of individuals who just are late in filing, and we can file an extension so they get time to go from April to October to get their paperwork together and to get their money together so they can make their payment on the taxes they owe. All right, then Form 9465 is an installment agreement request, may provide relief for those who owe and cannot make the full payment. And yeah, all right, then where to file? So addresses for filing centers are found on the IRS website. I already showed you all that. And taxpayers are encouraged to file electronically. Well, now everything is electronically. Every so often, you have to do a paper return, but even to do a paper return, you have to file it in the tax software and then print it out. All right, so how to file. So writing it in no more, it does not count anymore. So people that write in on the tab, the 1040s, it does not count. All right, so taxpayers may file their returns electronically by using one of the two methods: the self-selected personal identification PIN or the practitioner PIN method. All right. Then Form 8879 must be completed. Form 8879 allows us to e-file the return and send it electronically to the IRS. That's the most important form that you should ever discuss with your client, because if they don't sign that or agree to it, or well, pretty much when they sign the return, if they don't know that they're signing the 8879 and that they're getting permission, it could be like they didn't give you permission to send a return. So it's always important that you discuss it with them. All right. How to pay amounts due. So say a taxpayer owe an amount, they can pay with their credit card, they can pay with their debit card. And all this information is things that separate you from the normal person. When you able to spit this information out to an individual, they be like, man, how am I even supposed to pay my taxes? And you be like, well, you can pay with a credit card, you can pay with a debit card, or we can file Form 9465 and you can set up an installment agreement. And now you just got a client. All right. Next, accounting period. So a taxpayer must choose the accounting period he intends to use when he no longer files his first income tax return. The accounting period cannot be longer than 12 months. So normal calendar year, January 1st to December 31st. A fiscal year, fiscal, FISCAL year, a 12-month period that ends on the last day of any month except December. So these are most of the time when people, like in October right now, people are renewing their business license. A lot of people go from October to October, and that's their fiscal year. Accounting methods. So cash. So people that take cash. And this is important when you got your business clients and they're like, hey, I have a business, but I don't really keep receipts. This is why we tell them keep receipts, because if you're a cash person, all items are reported as income in the year, which they're actually and constructively received. All expenses are deducted in the year they are paid. Now, accrual person, accrual, ACC. I might be saying some of these words wrong, but that's just because I'm from New Orleans. I don't really try to proclaim that I'm like the best English person. I just say the words as they come. But income is reported when earned, whether or not it is received. So that would mean that that person will receive invoices, and because they got an invoice, even though that invoice hasn't been paid, they can count that as their money. Expenses are deducted when incurred rather than when paid. So again, say that they get an invoice for an expense. Once they get the invoice for that expense, it automatically goes in as if they've already paid off that expense, even though they actually haven't done so. All right. So Social Security number. What is a Social Security number? A Social Security number must be provided for everyone listed on a return. So you got this when you first was born, and they took your foot, and then they stamped it, and they stamped it onto the little piece of canvas paper, and you got a social security number. A social security number, name and date of birth must match the social security authority records. To obtain a social security number, we also help people with that. There's an SS5, there's an application for a social security card, and it must be filed with the Social Security Administration. All right. So say an individual needs a social security number or I-10 as an identification number that allows them to work in the USA, which is what a social security number is. And then we also help individuals apply for the taxpayer identification number for pending US adoptions. So this is important. No original or copy of social security card. So say a taxpayer doesn't have his original card or copy of the original card, he can obtain this by going to the Social Security Administration and verifying. Preparers should never file a return without verifying the taxpayer's Social Security number. So say you get somebody and they wrote their Social Security number on a sheet of paper for some reason. I don't know why. I didn't see it happen though in my time of doing this. But their Social Security number is literally written on like a lined sheet of paper, and they were presented to me, and the IRS kept rejecting it. So, and I was like, huh, this ain't right, right? This social ain't right. And they was like, yeah, blah, blah, blah. So what happens is if you keep sending up a return and keep getting rejected, remember I told you they have rejections. If you keep sending a return and it keeps getting rejected, you can flag your office. And when you flag your office, all the returns in your office, they all gonna get audited. So even if you got clients that's doing what they're supposed to do, everybody get audited. Everybody. It's crazy, but that's how it goes. And that's how people lose their office too. So filing statuses. The filing status is determined by the taxpayer's marital status on December 31st. Marital is actually marital. I said Marshall, my bad. Marital status on December 31st. So it's 5 filing status. So if you're not married, you're single. If you're married and you got somebody living with you, you're married filing joint. If you're married and they living with you and y'all don't want to file on the same tax return together because they owe money and you don't owe money, it's married filing separate. If you had a household and that's just you in the house and your husband might live there too, but he finna file his own return and he ain't claiming no child, you gonna be head of household, he gonna be single. If you're a qualifying widower, which means where you lost your spouse and you got a child, then you get to be qualifying widower with dependent. And the reason why they want that filing status is qualifying widower with dependent gets a greater deduction than a single person. All right, so before I continue, anybody got questions? It's almost 8 o'clock. I know I've been talking for a minute. We almost done too. Doing good. All right, no questions. All right, so single. Taxpayer can use a single filing status if on December 31st is unmarried on the last day of the year, is legally separated by divorce, a separate maintenance decree, and does not qualify for another filing status. Married filing jointly. Again, this is a married couple. They together before December 31st. So if they got married on January 1st of the next year, they're not married filing jointly for the year where they just ended. Just want y'all to know that. All right. Oh, filing status for same-sex married couples. Taxpayers of the same sex are considered married if they were legally married in a state that recognizes same-sex marriages. They will be treated as married for all federal and state tax purposes, including income, gift, and estate taxes. The taxpayer and his or her spouse must use the married filing jointly or the married filing separate filing status. Taxpayers who entered in a registered domestic partnership or civil union or other similar relationship that is not defined as marriage do not get to use this same-sex married couple status. And the reason why this is important is because married filing jointly receive a $24,000 deduction. It's like one of the, and there's even more now. I think it's like $32,000 of their income that is taken away as if they don't have to pay taxes on it. It's a big benefit, because it allows them to save on their taxes. All right, this filing status can be used. All right, married filing separate. Chooses this status if he is married, living together or apart, wants to be responsible for his or her own taxes, or chooses this status if the result is less than he would owe on a joint return. Cool. All right, we doing good. All right. Head of household. This is what most individuals will be. Now, you can't be head of household all because you want to just be head of household. In order to be head of household, you have to have a lease in your name. That's what makes you the head of the household. Either a lease in your name, a mortgage in your name, a deed in your name. You gotta have something in your name to be the head of the household. If it ain't in your name, you can't be head of the household. It's that simple. You don't get no more. You don't get no more simple than that. And you gotta have a child you're claiming too. So you can't be head of household if you're not claiming a dependent. Another thing. So a dependent can be your child, or it could be someone that's living in your home, that's been in your home for more than 6 months. Just want to put that out there too. All right. So what makes the cost of maintaining a household? Things such as rent, mortgage payments. I stated that earlier. Taxes that you pay, homeowners, renters, insurance, repairs, utilities, food eaten in the home. Things that don't count, clothing, that don't matter. Education status, don't matter. Medical treatment, don't matter. Your life insurance policy, don't matter. Transportation, don't matter. All right, and then there's a chart. It kind of breaks down. So amount paid by taxpayer Megan, she don't pay the property taxes. Megan don't pay the mortgage interest. Megan don't pay the rent. I don't even think they got a rent. They got a mortgage. So utility charges, Megan does pay the utilities, and Megan does put it on the food consumed. So when it all broke down, the totals came to 74,689. If the total amount paid by the taxpayer is more than the amount of all others, the taxpayer meets the requirement of paying for more than half the household and the cost of keeping up the home. So even though her mother is in the house with Megan, and yes, her mom paid the property taxes, and yes, her mom paid the mortgage interest, and yes, her mom put in on the upkeep and repairs and property insurance, and yes, her mom put in on food. In the end, Megan put in more money, so Megan would be head of household versus her mother, who also lives in the home. And that just kind of break that down, That's what that is. See, Megan expenses, her mom expenses. All right. And some more review questions. Good on that. Let me see. Let's see what this one is. All right, we got like 12 more slides, and then we finna wrap this up. Lisa has one child. Which of the following could disallow the use of the head household filing status? I'm gonna let y'all look at it, and then in a few, I'm gonna answer it. And thank y'all again for the opportunity. Again, everything will be on YouTube and available for playback. Please, 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 please send me your email so that you can get invited to the Google Classroom, so that you can start on the classwork and catch up. Please do make sure that you get your PTIN. No later than, I would say, November. Not even November. No later than like December 10th, 11th, something like that. The PTIN allows you to get paid, and it makes you a registered tax professional. And it costs about $19. Please make sure that you get that. One more thing. If you got any questions, concerns, you can call me or text me at 205-240-9955. I'm pretty sure of that. What else? Let's see. Yeah, it's gonna be a good season. It's gonna be a good season. It's gonna be All right, so the answer, Lisa has one child. Which of the following could disallow the use of the head of household filing status? Lisa paid more than half the cost of the house of keeping up the home. Then she get to use it. Lisa lived with her spouse during the last 6 months of the year. And she probably don't get to use it because they really married filing jointly. Lisa's home was the principal residence for her child. She could be head of household. Lisa had a roommate. Lisa paid more than half the cost of keeping up the home. She could be head of household. The answer would be B. And the reason why it would be B is because she lived with her spouse during the last 6 months of the year. So that would make her married filing jointly. And that's what you got to be able to decipher when a customer talking to you. They'll be like, I live with him, but I don't, we ain't him tripping. I don't know. We be having our moments. Sometimes he stay, and you just got to be able to decipher all that. Or it might be a situation where the man is talking about some other, I don't know. It'd be some crazy things that people be saying, but you just got to decipher it, read between it, and just kind of crank it out. But always remember is either single, married filing jointly, married filing separate, head of household, or qualifying widow with dependent. Just remember that. There ain't no other filing status that it could be. All right. Then Larry's wife, Margaret, passed away in January of 2017. They had 2 dependent children. Larry paid more than half of the cost of keeping up the home. Larry married Gina in December of 2017. Okay. All right. So Larry had a wife. She died in 2017. Oh, poor Larry. Larry had 2 children with Margaret. Okay. So he got 2 kids. Larry pays more than half the cost of keeping up his home. Look at Larry keeping up his home. Larry married Gina. Look at him, got him another one. I hope Larry ain't one of them snap people, be taking people out. So Larry married Gina in December. Then when Larry married Gina in December, which filing status should he use with Gina? So he no longer, I'm going to just go down the list. The answer is married filing jointly with Margaret. No, because he ain't married to Margaret no more. Margaret died in 2017. Rest in heaven, Margaret. All right, so he can't do that one. Would it be head of household? Nope, because he married Gina in December. And once he married Gina, that also made him married. Is it qualifying widower? You only get qualifying widower if he wouldn't have married nobody for the next 3 years. So if he wouldn't have married until December of 2020, then he could use qualifying widower or widower. And then you got married filing jointly with Gina. That is the one that he will use because even though he had kids with Margaret, he married to Gina now and he claims more than half the household expenses. Boom. Hey, that was cool. All right, residents and non-residents. All right, so first determine that the individual is a U.S. citizen. So with that being stated, a U.S. citizen is an alien, is a resident. A non-U.S. citizen is a non-resident alien. And they're not talking about somebody who is from space. I just want to say that again. All right. So green card test. If the taxpayer was a lawful resident of the U.S. at any time during the calendar year, they will have a green card. Substantial presidency test. All right. And then if we break it down. To meet this test, the taxpayer must have physically been present in the U.S. for a minimum of 31 days in the current year. All right. This ain't really nothing you gotta really trip about. Most of the individuals will come with, social security number, taxpayer identification number, because that's the only way, most individuals really kind of get that from tax forms, W-2s and things like that. All employers engaged in trade or commission pays wages, including non-cash payments of $600 or more per year for services by employee, must file a Form W-2. And that's what I was just speaking about. And in order to file a Form W-2, the employer must withhold income, Social Security, or Medicare for the employee. The employer will have withheld income tax if the employee had claimed more than one withholding allowance. And this just breaks it all down. And this right here was on the W-2. On the W-2, you got box 1, gonna be wages, tips, other compensation. Box 8, allocated tips. Box 10, 12, so on and so on and so on. All right, pay preparer signatures. All pay preparers must sign the returns that they prepared. So at the end, throughout, once you get your PTIN, you will get access to the software. When you get access to the software, I'm then going to ask that you do your signature in the software, and every return that you do for the year 2026 will have your signature on it. Huh? And then the PTIN, where everybody probably been wondering what that is. All paid preparers are required to apply for a PTIN. pay preparer identification number, apply using pay preparers and clearing. All right. $50 fine may be imposed for each paid return for which the preparer fails to provide a PTIN. All right. And then third party signature. We getting it up. Oh, this is another important thing. So anytime you filing other people's information, there's always a required retention of records. So records include copies of returns prepared in order to maintain the list of clients. Records must be maintained for the duration of the statute of limitation for 3 years. A $50 fine for each failure to maintain records, up to $25,000 per year. All right, and then these are the other prepared penalties that you could face. Understatement or disregard of taxpayer's tax liability to unreasonable position. Endorsement of a taxpayer's refund check. That means that you took somebody's refund check and you went cashed it as if it was your check. Crazy. Failure to furnish the taxpayer with a copy of this own return. That's $50 per return. And prepares willful disregard of the IRS rules that result in understatement of taxpayer's liability. And I just want to point this one out right here. Failure to furnish the taxpayer with a copy of their own return. That is, I don't know why that happens or occurs, but most of the time, if a tax professional is not trying to give you a copy of their return, something is iffy, something is really crazy, and you just need to get away from them. And we don't do business like that around here at PRXNCE.TAX. Every person gets access to their return. They email the copy, and if they need another copy, they get an email copy. Now, if it is a chance where I have to charge them, then I have to charge them if I need to print it out. That'd be normally like $5 or something like that. All right, so just to kind of explain what this is right here. So let me just close this out right quick. Because when you get access to the class, you're gonna want to know. So the learning activity and the study questions. Okay, here we go. So learning activity, here we go. So you're gonna go to class where it tells you how to do it too, and how to submit it and everything like that. It's really cool. Like it's a real cool setup. It's like a little mini class on taxes. It really is. Like it's really good. But this is why I know what I'm doing. All right, so you scroll all the way down, or you can use your little scrolly. You got a little scroll bar on the side. You scroll all the way down, probably like page 50. You're gonna pop over in a minute. Let your internet catch up with it. All right, there we go. Study questions. The study questions is based off study question. So this one don't have a chapter. It's normally like an assignment that comes before the study questions, and then you would use that assignment to answer the study questions. And that assignment you would input into the tax software, and that's how you like practice putting it in people W-2s and things like that. So you will do that too. You're gonna do practice returns. So then you have your review questions. And this one doesn't have a learning activity. Or does it have a learning? Oh, yeah, there we go. The learning activity is underneath the study question. So the learning activity, you're going to use Kimberly and Kimberly's mother. Use the chart. Who paid this? Who paid that? Add up the total cost. And whoever paid the most, that's who head of household is. And you're going to need to better understand that because that's something that you're going to actually face in the real tax season. Because you're going to definitely have some people that be filing and they don't understand that they head a household and this stuff. And that's really, that's why you're important. And then the study question. So John Clark, a full-time student living with his parents, had a summer job and was a waiter at the restaurant. Is he required to file a tax return? You're going to answer each one of these questions. 1 through 17, and then you will use the chapter to help you answer the questions. And then you also have the PowerPoint to help you answer questions too. And then you just submit it into the classwork, and yeah. And then when you actually get access to Crosslink, which is my tax software, it does throw you out if you don't like stay logged in. When you get access to Crosslink, you can actually go check in and do some of these items and just like see how it works, starting a return, things like that. And it has little videos for each thing, so that way you can watch the video and it's all on YouTube. Like, it's a really cool way I set it up. So I do hope everybody make sure that they send me their email. Like, I'm gonna add somebody right now. Watch this. Hey, I love when I get that text message when it's the earliest I can start filing. Yeah. All right. So I'm gonna add this person. Tax on track outlet.com. Down. And if it's just 60 y'all, that mean I got 4 more people I could take on in the class. So if y'all know anybody that's interested in learning taxes, that's trying to make 7 to 15,000 on the low end, trying to make 30 to 50 on the medium end. If y'all know them, they interested, have them hit me up. And they good. As long as they don't miss the next 2 classes, they in there like summer. But that is the end of the juicy juice for me for today. So just to recap, I went over CrossLink. This is the tax software that we use. I prepare about 300 people a year. I'm expecting to do about 500 next year. That's the goal. So I definitely will be needing you all. I sell houses. I'm always doing something. So I just need help and assistance, not only with my own clients, So, and then you do receive 80% of your own personal clients that you bring in. And if you bring in 10 each month, you should expect to receive, what is that thing called? An additional 1,500 on top of that for your commissions. What else I got for you? Oh, so the way we get paid, it is a 7 to 21 wait. So you will file a return. IRS would acknowledge the return. Once they acknowledge, 7 to 21 business days later, taxpayer would get paid. Once the taxpayer gets paid, you would then get paid. So you don't get paid until the return go through. And that's how that go, especially when it's your own personal clients and you waiting on that 80% of that 1,000. Just know you waiting for the IRS to do whatever they got to do. So I am open year round. That's another thing that separates me from everybody else that files taxes, does something in the tax world. What else I got? Yeah, that's it for me. And if y'all got any questions, comments, or concerns, y'all can ask right now. But that is the general overview. I thank you all. And I should be setting up, if you all are located in Birmingham, I should be setting up a photo shoot for you all to take a headshot so that I can create your flyer and your graphic for the upcoming season. And yeah, thank y'all for the opportunity. Make sure you do tap in. And yeah, thanks. Any questions, comments, or concerns before I turn it off and cancel this Zoom feed for today? Man, I'll be working. What do I do next? All right, I guess not. Well, I rock with y'all. Y'all have a great day. And that is the end of this Zoom. Cool. Somebody said no. All right. I appreciate y'all. Y'all stay blessed and have a good one. And everything you just did will be available on YouTube. And if y'all got any other questions, you can always call me. Thank you.